about butterfly spreads. I do have a calendar spread that's on this week. Took it yesterday. It's not really a part of the service. I'm kind of experimenting with it since we have a higher VIX. When we are going with like uncertainty and elevated volatility, I tend to look at calendar spreads. They're interesting trades because there's a profit opportunity. We'll see what price does, but basically in the middle, I have the weakest part of my trade. I have a profit trap. I have a profit trap, but as price stays elevated, if we have any volatility expansion, if we go from like an 18 VIX to a 20 VIX, then this middle comes up a little bit. So my risk is kind of like this, where I have like very little risk in the middle if price stays dead. But if volatility goes up at all, this usually comes up and allows me to grab some profit. This is, I'm trying to think, like almost a 4-to-1. This is a 4-to-1. That's difficult to achieve, but usually you can get a 1-to-1 or 2-to-1 in this trade. So something I'll monitor in SPX. We will look at our levels today. And look, the trade I put in yesterday, the pending orders. I mean, we kind of floated all day yesterday. I do want to ask if anybody put in, if you got filled for $1, I think the initial daily profit play for $1 would have been close to getting filled because we ran up to like highs of 40 yesterday. Let's go to SPX. I'm not sharing the screen. Hang on a sec. Sorry. I'm just talking, leaving you in the dark. All right. Yeah, I'll go back and talk about that. Okay. Yep. We see the screen now. Got filled 1 out of 75 cents. Okay, good. $1.45 out of 70 cents. Good. Good. Okay. So let me pull up. This trade should still be saved in my dynamic trend. This has the leg. So I did a Monday, Tuesday calendar spread. Looks something like this. So this is my trade. I sold the calls and puts on the 27th, which is next Monday. And I bought the calls and puts on Tuesday. So there's that saggy middle. But if we have elevated volatility and price actually goes up or down, I start to see some profit realization, which is what I'm looking for. So I'll see if it's, profitable today. It probably won't be. But something about, I get it that this market, hasn't hit the 50-day moving average. I think that, maybe this broadening pattern that I'm talking about might be a bit of the play here, something like that. We probably will see additional volatility. I don't know this. Obviously, I don't know this. If the market, goes up here and stays up here, okay. What's it driven by? Earnings, right? So let's talk positives for a second. Positives. If earnings are steady, that's a good thing, right? Fed easing. We want US 10-year to not rally. I'm not going to say we need it to go down, but I'm going to say, staying somewhat lower. We're at like a 3, 4, 5, 6 month low on the 10-year yield. That not rallying would be important. Okay. And I would say Trump versus China, we have to have some type of trade deal / negotiation. I think we would be silly to make this more contentious. I think we'd be crazy if we're talking about this is the most important thing ever to build out AI and win the race in AI. We need rare earth. We do. And China's been doing this since 1990. We just started doing this. Like, we are definitely playing catch up. I don't doubt what the US is capable of. But I think there has to be something better than just we're going to tariff you 150%. It's like, that's not going to work. I think this works both ways. I think that, China, although their rare earth negotiations worldwide are not great. They're basically hoarding. I think this ends up being like, nobody wants to see the stock market fall. Nobody wants it, right? If the US drops, it's dragging everybody with it. I think the difference is maybe the US's economy is linked to the stock market a little bit more than other countries. I think China could be like, oh, yeah, we'll let our stock market fall 50%. and we'll figure out how to get through it. We, on the other hand, are like, we never want our stock market to go down. We will engineer no recessions all the time. We will backstop the market. So anyway, I think there's going to be some type of negotiation, whether it's the end of this month, into November. I'm not sure when the next big talk is or big meeting is, but I think something happens. And I'm trying to think what else. I mean, sentiment's been all over the place. Um, I guess maybe the private equity is contained. I'll put worries, or these is essentially these are credit worries are contained. Okay. I mean, all these things could continue to fuel this market higher. Why do I put the broadening pattern in here? Because the broadening pattern could be the volatility that might stall the market for a little bit, right? Direction down, direction up, sideways is a phase. We could go sideways. Um, but like I said, I want to be careful that sideways up here is not distribution, but rather accumulation. If you ever see me talk about my pinch point scanner, that pinch point scanner, okay, when we have pinches, okay, if it's coming off of a bull trend, like this was an accumulation phase where smart money's in, this could be a distribution phase where smart money is dumping. And we just have to be careful of that. But again, there's a lot of people that are bearish, a lot of people that are worried. It's so telegraphed. I think the market doesn't like to reward people that are overly hedged, and right now puts are expensive. So we'll see. But literally as of last week, not breaking this low, not hitting this 50-day, I think that we might still test the highs and come back down, but this might be sideways for maybe a few more percent. Maybe we get down to this like 5-6% position to the correction side. But after yesterday's rally, it's like, again, positive gamma day to day. This market doesn't care. It doesn't care. And if we break these highs and keep going, this market clearly doesn't care. And the VIX dropping was a huge tell. A 29 VIX and the market was barely down 1 or 2%. That's a huge tell. That volatility needed that ventilation. It got it. But you're going to see vol suppression coming right back. It's back. I mean, 29 VIX down to sub 19 VIX. So we can flare back up, but man, that's a big drop in VIX last week. So I think that continues to kind of fuel this market. So anyway, Deanna, can we post that if it was running the session for the gamma report? I think that was a good one to check out. All right, let me get a couple more workspaces up. We closed yesterday. Let's get my daily profit play here. So yesterday we opened up above the 50% ATR. I'm just going to update this. So close was 67.35. Friday's close was 66.62. Okay. 66.62 on Friday. Closed yesterday 67.35. Gap higher. I'm just typing this in for my ATR tracker. Gap higher, and price was slow but directional all day. Price finished between the 50 and 100% ATR, shy of the gamma call wall at 67.50. So if you played the 67.50 in any way, that was what we showed for my resistance levels. I calculated based on the VIX, so I want to go a little bit higher. That like 70 starting point, 70, 75 none of those trades filled. I put in broken wing butterflies, didn't fill. Put in bear call spreads, didn't fill. Put in iron condor, didn't fill. It's okay. I put the trades where I wanted to put them. I put the credits that I wanted, didn't get filled. It's okay. I'll do the same thing today. All right. So a bit more directional. And really, it was kind of just the first 5 minutes. I mean, that first 5 minutes, that was more of a move than what the market kind of gave us all day. Now, granted, yes, like this move up was enough. If you jumped right in at the expected move for daily profit play, that would have been probably testing your 15 deltas. I would imagine if you got in right at the open. Had you waited a little bit, by around 10:15, 10:30, obviously price went pretty sideways after that. But I'm not placing trades here at 10:15, 10:30. It's like I like to trust the process of getting in within the first 3, 4, 5 minutes and mapping this thing out. So, all right, let's go 67.35 for the indicator. Take a look at our levels. A couple more workspaces here. This is my gamma level. This is my day-to-day VIX. And this is my intraday. All right. So I'm going to note this for my calendar spread. So if we come into my peak, these are my profit trap levels. I'll keep an eye on those, and I want to see what price does. VIX at 18. I mean, that is a pretty large retracement in VIX, 36%. Wow. So do we flare back up at all? Maybe. I mean, we have CPI this week. Maybe it flares back up. Maybe it doesn't. But if price moves, I mean, it's kind of two things with that calendar spread. I get the benefit of price moving. So if price moves up or down, I benefit from it. And if price doesn't go anywhere but volatility increases and there's noise, then I can still get a bit of a profit in the middle. Okay, so we're at the 21st today. So I can see, possibly seeing some profits here. Possibly, but I'll keep an eye on it. All right, levels for the day. Let's go pre-market. Again, call side, positive gamma. I mean, maybe just to drift into the call side. It is running into kind of immediate resistance around that 6750 point, but we now have gamma levels up to 6800. Let's look at our VIX tool. VIX is at 1863, so just over 1%. 1.16. We're not really going to have a big gap today. I mean, literally the futures is at 0.03. The CFD is at 0.12. So there might be a little tiny gap here, but not much. So this VIX box should be about the extreme as far as like selling calls and you're looking for a top or bottom. Expected move on the day, I would imagine, is probably sub 30. Let's check that out. If we go SPX on the day, I'm showing a 30.44 plus or minus today. Okay. Again, I know that's the expected move. If I went maybe 5 to 10 points higher, that's probably going to be the 15 delta that I'd start with for daily profit play. There's just part of me that, I don't know. I don't love that I'm selling so close. And we have an incredible amount of pricing skew right now where the puts are way further away than the calls. Still, even though this is tightened up a little bit, even though the VIX has dropped from 29 down to sub 19. So I'm going to plan on, setting my levels like I did yesterday. If we get to these extremes, it's going to be, obviously difficult to get to those extremes, which is kind of what I'm planning on. Okay. So if I can set in bear call spreads, set in bull put spreads, that would be okay. Look at the VIX box compared to the ATRs. ATRs are pretty wide open, which is kind of crazy. Usually the VIX box is, into the like 100 to 150 ATR. Now it's contained within, the 50 to 100. Wow. That's a big difference. Let me see what this percentage is. Should be about 1.16. Yep. So VIX box, it's accurate, but ATR, you go 5-period ATR. We obviously had a lot of intraday volatility last week, so the ATRs widened out a little bit. Okay. But not a big gap. Not a big gap open this morning, which is pretty good. So range wise, let's do this. Take a look at some of the gamma levels that I have this morning. This is what I see pre-market. Gamma pivot is as long as we stay. I don't think that can't be right. Oh, I guess it is. Okay. Well, this is an interesting open then. If we're above 67.35 positive gamma, if we're below negative gamma. So that does make an open like slightly lower. If we don't get immediately above 67.35, then there obviously is a chance we run down to find 67.10, 6700. This gap is vulnerable, in my opinion. I think the gap's vulnerable. More noise, right? How easy would it be for this market to just have this run up, fail at these highs, and come back down and fill some of these gaps? I think that'd be very possible. So let's find out. Let's find out. So maybe on that like 30, maybe on that 30 point expected move, if I'm feeling a little bit more toppy today, then I focus on selling bear call spreads and see if this gets into negative gamma. But I clearly want to have my, mechanics where the delta is not super high. I don't want to sell like a 30 delta call. I look at more like the 15 delta, 10 delta call. Maybe see if price is going to drift. Okay. Big drop in gold and silver today. I don't know if you saw that, but gold having a pretty sharp decline, which I think it's about friggin' time. I think there's more room to fall. I hope that it does fall. And silver is more. Another big sell-off in silver. Okay. I mean, again, this is a 21 period. Is this where I buy the dip? Probably not. I already have positions in SLV. I'm looking at the protective put side. Does this get back down to like the 50 period? I mean, I think we have I don't know. I wouldn't be surprised if we have like a 10% correction. Well, there it is. There's 10 in silver. It's crazy, right? Like silver could correct anywhere between 10, 15 to 20%. So I'm just going to let this marinate. I mean, I think it'd be silly if I take profits right away because I do want to have this more downside protection. So I'm looking at silver coming down potentially into like the 30, I don't know, let's say $40 to potentially $38, which would be a heck of a decline. But, technically that's what we should see is some type of 50 to 200 period moving average support. And it's going to be nasty. It's going to be, oh my gosh, silver is the greatest thing ever. And now it's don't touch it. But that's not true. I think this is a chance to hopefully get a nice technical correction that we can buy the dip, or at least position for the dip. Okay. So looking at the daily highs and lows, unless we see the VIX go back up and we break into negative gamma today, highs, we shouldn't see prices going too much higher than, I mean, if I'm going to take an aggressive stab at it, we shouldn't see prices going too much higher than probably 67.80 or so. That's all-time highs again. That's a 50% ATR. That's a gettable target, but anything usually above that 50% is pretty safe resistance. If you want to be extra safe, you sell it to VIX box. 68, 68.10, 68.15. That zone would be where I would be selling bear call spreads. Okay. If you want to be a bit more aggressive, I think 67.80 could be a good spot for today, simply because we would fail at the highs. Maybe this rolls over into negative gamma. Maybe this backfills some of this inefficiency from yesterday where we have a gap and that first big run in 5 minutes. Okay. And I'm just mainly saying that because of how close we are to opening and having positive gamma right here at the open. So if we bleed a little bit softer, does that quickly go negative gamma that falls and doesn't recover on the day? I don't know. But again, you can look at the kind of the magnets of my gamma levels. These are larger than these. So if we open soft, we get to them. It's possible. So I'm looking to see do they act as resistance. Okay. All right. So I'm curious what I could get here if I kind of took a one contract trade around that 50%, and then I would probably scale in for the defense level around the VIX box high, which is around 1.16%. So numbers wise, based on the close yesterday, 1.16%. You can see that's quite a ways higher. About 68.10. So 68.10 to 15 potential top. And if the VIX doesn't go up, you're looking at 1.16, 66.55. Okay. But it's again, when the VIX is up and prices are falling into negative gamma, it's difficult to call the bottom. I don't like to call the bottom when VIX is elevated all day. So just be careful on that. So 68.10. Okay. So you can see here on my VIX box, like that is the spot that I want to be selling. So 6,800, 6,805, 6,810. Not a bad spot to kind of say delta wise, that should be pretty low. That's going to be like 60, 70 points higher. It'll be a really low delta. You're not going to get a good credit if you take that trade, but it's letting the price sit there in case we go up towards this 50%, then we can get filled on that level and it's hopefully safe and resistance, or the market just can't get there for the day, right? All right, so that's where we're at. If we come back in and fill this gap, I wouldn't be terribly surprised. But positive, negative gamma, that's what you kind of got to keep an eye on for day to day. Okay. So, like I said, gold and silver having a nice little correction. Gold from the recent highs, not nearly as dramatic as silver, but gold is still down about 4.5%. I'd like this to potentially get into double digits. That 21 period moving average is 8%, 50 period moving average is 13%. Straight up since August. I mean, this has happened in the past. This blowout move of 20+%, we might see price come all the way back down to take this entire level out. And this is the trough that we'd look to buy. I would look to buy this. Okay. So I don't want any type of crazy, scary price action to derail the bigger picture of like, I still think gold is a great trade, but medium to longer term. You got to be thinking, what's the next 3-5 years on gold and silver? Probably higher. So any reasonable correction we get, I would still like to buy it. But if it takes out this level, I think that's an excellent opportunity. It doesn't do anything to take away this bull market. Okay, you can extend all these trend lines out. Extend all these trend lines out. Right? This market can come all the way back to this breakout point and still have plenty of support all the way down to like 3,000. And it's still a bull market. Okay. So I'm still going to be positioning longer term on gold and silver. Bitcoin, I think if US and China play nice, I think Bitcoin has a rally that is, likely happening. I think also if the S&P stays solid at the highs or potentially go higher, I mean, the market could clearly go higher on a US China. I think that's suppressing all additional direction right now. That's what I'm saying. That kind of broadening pattern could be like the perfect confusion pattern at the top of the S&P right now, because we could get close to highs and fail. We might come down and take out that October 10th low, but it just keeps bouncing back and forth because there's just some big decisions that need to happen, i.e. China and US. Fed's going to cut. Okay. They cut in October. I mentioned this yesterday in the Gamma report with Kane. The December rate cut, I think it's December 10th. I do have a concern that if the Fed cuts in December and this 10-year yield is not lower, I do have a concern that something like September 2024 is going to happen, where we start to go the opposite way. I hope that's not the case. I truly am hoping that as the Fed is cutting, this goes along with the 40-year trend that when the Fed cuts, yields follow. The problem is the Fed is only really in control of cutting the short end of the curve, not the long end. And so if the long end remains sticky, if the long end remains elevated, that's not a good thing. Or maybe the window of opportunity to get better rates would be, you've got to time it where if we come down to this area, maybe that's the refi window. If you want to refi in a house, I would be in that window. If I closed here at 6.6, if I can get a refi like right now, I actually called the mortgage team last week. I'm on a watch for rates. Refi's at like 6.09 or 6.1. So, I mean, I want this to drop another 20, 30 basis points. I would like to refi at like a, 5, 6 or lower if possible. That'd save about $500 a month, and I'd still pay what I pay now, so I can chip away at the overall mortgage with principal. Anyway, talk about that later. All right, let's get to it. Opening bell. Here's some levels. So futures flat, CFD flat, S&P opened. Zoom in here. We opened just a tiny gap higher. Let me get my levels. So like I said, the aggressive side will go to the expected move right here. You can see here, it's pretty tight, man. I mean, plus or minus 23 points in the day. That is really quiet. I'm sorry, but I'm not going to trade that as like, yeah, 23, we're going to move 20 points today. No flipping way. We've seen 60, 70, 80, 90 points, 100 points of movement last week. I know that the VIX has come down, but I'm not going into like a 23-point range and saying that's all the market's going to move today. So I'm going to put my levels. I'm going to be cautious. I think it's feasible that we don't necessarily get to the 50%. If I want to be aggressive, I would say we don't get above the 50% ATR. If I want to play the safe levels, I think up here, okay, we can see the ATRs just got adjusted, but still like not having the VIX box up above the 150 or so. I think ideally I start like 6,800. Okay, so I'm going to go up here to 6,800. And right now, I mean, this is the crappy part. It's a 2 delta. Okay, if I want to start at the 50 period or the 50% ATR, it's 67.70. I don't love this trade. Okay, if I went 75 by 80 to kind of test this level, it is just a test, but price could certainly go through it and stay there. So the more defensive would be like 6,800. Okay. All right. But let me see what I can get for. This is what I struggled with yesterday. Literally in daily profit play, I wasn't settling for this low plus or minus waterfall income. I didn't even take a live trade yesterday. So I'm not getting the prices that I want. And in this, daily profit play, especially, I refuse to get crappy credits. If I'm going to put trades on, I want to put it at the levels that I care about and the credits that I want that I think are fair. So if I want to go 15 delta, here you go, 15 delta. 67.65 would be my call. There's a 15 delta. 15 delta put would be 66.90 and 85. You get $1 for that right now. Like, that's the trade. And now we need to see if price will cooperate for 60 to 90 minutes. That's the trade. It's not a bad trade, but I think that a 20 plus point move. I mean, there's no major news. I get it. Like, I can see why the market would be really quiet, but I'm not buying it. I'm sorry, but like, I don't want to take this trade. So this is the trade if you want it. 15 delta, 67.65 by 70. If you want to go 10 wide, that's fine, right? Just stick to your mechanics deltas. So there's 10 wide for $1.80. There's 5 wide for about $1. Okay, which isn't a bad trade. 23-point move, and you are currently 30 points clear on the call side and about 45 points clear. 45 points clear the put side because of the pricing skew. So I'm not going to take the trade. I'm just showing you like that's the mechanical daily profit play right there. Okay, I'm going to go up to the top towards my 6,800, and I'm going to layer in some 68, 68.10, 05, and 15. Right, which right now we're trading for next to nothing. But if I get filled on these trades, if I'm going to go 10 wide, 10 wide, I'm going to go after, I'll do this. I'm going to go 6,800 and 10. I'm going to try to get filled for, I'd take $2 credit on this trade. And then a 68.05 and 15, I'll go $2 on this trade. Okay, so my level where I think we don't necessarily get to today is 6,800. So would I settle for $1 on this trade? If I was 5 wide, yes. If I did 6,800 by 05, get $1. And if I did 10 and 15, get $1. Then yes. But I'm going to go 10 wide, so I want $2. Okay. And if price doesn't get there, it doesn't get there. All right. So look, I will, I'll eat crow if the market only moves 20 points today, plus or minus. That would be a very different change in our market behavior from last week. If we go from, high intraday swings, I know the VIX came down from 29 to 18. 18 is not a low VIX though. 18 is still pretty elevated, right? I mean, when we talk low VIX, we're talking like sub 15. That's a low VIX. That's when we should see the plus minus at 20 points, not at 18, you know? So I want to take the trade that I like. I want to give price the respect it deserves. This market might hold this positive gamma level and head up to the 50% ATR. Let's go real time. Here's my real time gamma. Here's our positive negative gamma, this yellow zone. So we're up above it. I'd say the 6750 is pretty gettable. Okay. Your 50% ATR is up here at 6785. I mean, that if this was, and I'm just speaking from experience here, if I had a large gamma level up here at the 50%, then I would be going after it directionally. That would be a great trade for double up right there. Okay. But because there's no gamma level there, I think this market's going to struggle to get through, 6750 to 6770. I think that is actually going to be a pretty good resistance level. Remember, 6765 is our all-time high. Okay. So there could be a lot of resistance there. Check our levels here. Here's your 50, 60, and 70. Same thing. Like, do we have resistance right at 6750? All-time highs back here at 67, 64. So let's let price come to us. I think that's the safe thing right now. That's the smart thing. Let price come to us, and also respect. I mean, an 18.5 VIX is still reasonable. That's still high. We're not 16 VIX. We're not 15 VIX. We're not 14 VIX. We're not vol suppressed. All it takes is one little pop up here from like 18 to 20, and we're right back into this like crazy week we had last week with a lot of noise. Okay, good, Susan. Yesterday's for $1 out at 70 cents. Excellent. Just follow perfect mechanics. It's great. Okay. Financial news today, not really. If we go, I'll go to the economic calendar here. I don't think we have any pressing news this week other than CPI on Friday. So today, CAD CPI came in a little hotter. US wise, not much going on. Fed speaker, so Waller, Global Dairy Trade Index for New Zealand. I used to pay close attention to that one. Yeah, I mean, pretty light news today. One trade that, I mean, I don't know what's going to pay us, but let's find out. 40 to 50. Let me see something here. If I did a 40, 40, 60, 20. So I get 1450 credit. I'm risking $540 to make 1400. If price stays within this range, like that's pretty good. I'm wondering if I could position this so I could do kind of two. I don't know. It's just too much risk. Like I don't want to risk that much. If the market slips through 20-point range today, then I'm toast. If the market's sideways for the first 60 minutes, this is a pretty good way to put that capital to use and pull it in for a heavy credit, and you're risking way less than what you'd have for profit. But am I stoked about risking $500 today if price slips through 67.60 on the upside or 20 to the downside? I mean, not really. That's current price, right? We're trading right at 40 at 39 live. Okay. That would be that's an iron butterfly. If I sell a call and then buy 20 points out, I sell a put at the same strike and buy 20 points out. So basically you break this down as a combo trade. This is a bull call spread with a bear put spread, and I have the same sell strikes. Okay, that's an iron butterfly. And that looks like this. You have risk, you have profit trap, you have risk. So I'd be risking about $545. for potentially 14.55. And all I'm looking for is if price stays within this range, we start out with the trade initially. I'll change the color to blue. Price looks like this initially. You collect about, $14. That blue line is going to represent your actual P&L. If price stays within this range, this starts to go up a little bit. And then a little bit longer in the trade, it starts to go up a little bit more. A little bit longer in the trade, up a little bit more. Right. And then later in the day, it's like time is your friend. If it stays within that range, you're getting closer and closer until this ultimately matches your profit trap. But price has to stay in that range. So it's a really good strategy. Day to day, these iron butterflies do a pretty good job. At the money, you're going to take on some risk. Out of the money, similar to what I do with double ups. If I put this trade where I think the puck is going, these become extremely profitable with very low risk. Like I've had these trades before where I can get in for $9 credit and only risk $1. And if the puck goes to my net or goes towards the trap here, it's pretty easy for this $9 credit to turn into 876 debit. But I've got to have a direction. That makes it a little bit cheaper. All right. So anyway, that's a thought, but I'm not loving this 545 risk for the morning, so I'll hold off on that. So here's what I want to watch. If we slip below, I would say below 67.30. If we're less than 67.30, do I start to see some levels lining up here? That would be a 67.10, potentially down to this 50% ATR, which is around 66.85. Okay. And there's my inefficiency from yesterday. So if we slip below that, I can see price heading down there. All right. Let me see one other trade for this morning. I'm gonna leave those bear call spreads in. I think on the kind of the gamma side, like 75.80, maybe this year, maybe. It's probably not going to offer the premium that I want, but I'm going to find out. So 75 to 80, that's all-time highs. I would take this broken wing butterfly. So my 50% ATR on 67.50. My gamma levels at 67.70. 50% ATR is at 85. I think that's where I have to be. Maybe pin this thing at 85. So 80, 85, broken wing butterfly. I'll take this trade for $1. I don't know if it's going to get filled, but 50 cents to $1 on this trade is not bad. I'm going to go after $1. All right. So I'll put this in officially for daily profit play telegram, pending orders. Pending orders, I'm going to do 2 bear call spreads, 1 broken wing butterfly. Today's plus or minus is 24.7, and I'm skeptical that market makers will maintain that range with the VIX at 18 plus. So SPX 1021 expiration. Sell the 6805 call, buy the 6815 call for $2 credit. Pending. SPX 1021 expiration. Sell the 6800 call, 6810 call, $2 credit. Pending. SPX 1021 expiration. 6780, 6785, 6795 for $1 credit. Okay, all pending orders. So right now, what I'm assessing here is we're right at that positive negative gamma pivot. If price breaks below it with some follow through, there's room to fall. Okay, I don't see a lot of magnetic pull here from the put side gamma, but if it's growing, like you see this like 6700 seems to be growing a little bit real time. If we just keep inching lower, like I said, finding some of these gamma levels, finding this 50% ATR, we'll come back and maybe test this low, maybe fill this gap. One trade that I can throw in this morning, this would be officially for my daily or my double up service, would be if we find 6,700, this wouldn't be a terrible gap. This should be pretty cheap, actually. If I did a butterfly spread at 6,700, this should be pretty cheap. So for 60 cents or cheap, I mean, this is pretty good. Let's go 40-cent debit. 40 to 50-cent debit, that's a low risk for potentially a good profit. Let's see if we can take this trade. 40 cents not filling, 45. I mean, 45 would be a really good fill. That's a low risk trade. $0.50 not filling. Okay. 55 maybe. Come on. Hopefully no more. Oops. 50. Oh, I got filled. I didn't hear bells. Okay. So trade. You can have this. This is officially for my double up service. I'll post this chat. This is officially for double ups. Double up, new trade. SPX 1021 expiration. Buying the 6710. Selling the 6700. Buying the 6690 for 50 cents debit. So 50 cents is my max risk. $10 credit is my max profit, which would net out to be about $9.50 max profit. Ideally, looking for price to move to 6710 to 6700 area and offer 100% return or better. So if my 50 debit turns into a dollar credit, right? So I go from a 50-cent debit to a dollar credit, $1.25, $1.50. All those levels look pretty realistic. We'll see if we get there. So that, I mean, if we're going after something directionally, if we get into negative gamma, we fall back into this pocket and we try to get to this 50% ATR, we're in the way. So if I'm going to skate where the puck is going, this is a pretty good opportunity for a low risk trade. 50-cent debit, that if price is cooperating, that 50 cents should turn into a dollar or more. Okay. So I'm in that trade for double ups. You can have it if you want it. So I'm going to copy this one since we're talking about it here in daily profit plan. Here's the trade. And the nice part is now I can just set the take profit. I'm going to go this trade here and look to close it. I'm going to try to close it at $1.50 credit. This order could not be updated. Why? All right, let me log out, log back in then. See if I need to reestablish my broker connection. But price is falling, so this is good. 60 cents, that's totally fine. Look, you have up to $10 profit. $10 profit is at the very end of the day. That's not really the trade I'm going after. It's mostly, can I get that net out there where I can cast my little profit trap, into this area where price is likely going to be going. Okay. Again, what's reinforcing this trade? Again, this might be a losing trade. If I lose, I lose $50. But if I'm right, the ability to turn $50 risk into $100 of profit is pretty realistic. If we're negative gamma and these levels start to fill up, we go after a 50% ATR. Those are like very gettable directions for the day. If all of a sudden this pivots hard and goes back up into positive gamma, okay, fine. I can't control that. But right now, looking like negative gamma, gap to fill, perhaps inefficiency to fill, and coming after any of these gammas here or this 50% ATR. That's what I'm going on. And if I risk $50, I'm a lot happier with that risk wise than more. Okay, log it back to my broker platform. Okay, yesterday ran a live session for newsbreakers. Took a trade on Tesla, IBM, Intel, and GE Aerospace. Today, I want to look at a trade on Netflix because we have earnings after hours on Netflix. Actually, this might be a pretty simple trade, so I'll keep an eye on this trade here. Logging back in. We have the November waterfall strategy 2 looking good for profit, only a couple cents lower to get my 90+% credit. What is this? That's a pullback order. Okay. I was like, what is that debit order? So that's a pullback order. Let me go into my SPX here. So double up and put in the debit for 50 cents. I'm going to put in a close order at $1.50. So that'd be a 200% winner if we get it. GE, I traded that in Newsbreakers yesterday. Newsbreakers, we took a trade for Tesla. So this trade is for Newsbreakers. Newsbreakers, we did GE, which is pending. We did Intel. It is this guy. And IBM. IBM is pending. So pending IBM, pending GE, live trade Tesla and Intel. And then today I want to look at Netflix. So let's take a look at the chart here. I'm running another live session today. Yeah, it's a pending order, Greg. So you see it in the tracker. It's a pending order. And same thing on IBM. Pending order IBM, pending order GE on the Newsbreakers tracker. Okay, Netflix earnings today after market. I mean, pretty quiet. I mean, in a way, it's like I'm hoping that Netflix does this. If we blast through the highs, I don't know if I want to fade that move just because anything bullish right now, unless the entire market's going to go down, anything bullish kind of has stayed bullish. What I'd like to see happen on Netflix is we get a pullback into moving average support and we can buy down here with a discount. So I'm going to put a trade in. I'll give this to you as a freebie for this will be official for my newsbreakers. You can have it today for daily profit plan. I'm going to see if we get something here like as long as the trade's not like 10 wide. If it's like 5 wide, that's totally fine. But I'm not sure because I might play this a little bit longer if I went out to this is a 1110 to 1100 area. Let's find out. Netflix. If I go out to the end of the year, yeah, I had a feeling it's going to be 1020 wide. So if I go 11, 1110, 1100, maybe 1100, 1110, bull call spread. Is it possible I can get filled in this thing for like $4? So $4 to make $6, right? Maybe. Let me see what it would be if I did this right now, like at the money. If we're at the money, that's 20 wide for about half the cost. If I was at the money, it's just under half the cost. What's that percentage? 930 out of 20. So 46%. 46 times 5. So 460. I'll go 450 on this, I guess. So an 1100 by 1110, 450 debit. So I get 550. I like $4 better. I'm gonna go $4 debit. How much lower can we come? Pretty good support here around 1107, and previous highs around 1163, or I'm sorry, 1063. So somewhere between like 10, I don't mind this one, like 1070. I'll go a little bit lower. Let me go 1070. Okay, now we can tighten up the risk a little bit. This makes me feel a little bit better. I'll go 1075 by 1080. 1075 by 1080. See if we can get in this trade for 250. Okay, I'm going to post this as a pending order for newsbreakers. Newsbreakers. New trade. Netflix. No, it's not filled. It's just pending because I'm going quite a bit out of the money on that trade. Well, I guess technically I'm going in the money, but I'm not going to pay for the in the money price. If I want to buy the 1075 by 1080, it's a $5 spread that's going to say, hey, pay 427, you can get that trade. Well, that's the terrible reward to risk. So what I want to do is see if price right now will fall into that area and offer a better trade. So I'm trying to get this trade filled at a nice discount where it becomes more like an at the money position. So I'm going for a 250 fill. So if I get filled for 250, potentially $5 credit as a winner, so I can get 100% return. 250 max profit, which would be a $5 max credit. This is a pending order based on strong Netflix support. Matthew, can I confirm the SPX 6805 to 15 call spread? It's a bear call spread, $2 credit. That's confirmed. Yep. I haven't been filled though. It's just a pending order. The idea being that 6800 will have to. No, not really. I mean, if we hit it early enough, let's say we get up to like 67.75, 67.80, if we do that in the next 30 to 60 minutes, that trade can get filled. Usually these trades that I put in like at these levels, if we get filled in the first like 60 to 90 minutes because price is up or down, that's usually a trade that can get filled. But later in the day, it might not fill, and sometimes price would like for that trade to get filled, we'd probably have to see price go to 67.95, 6800 later in the day, and then maybe offers like $1 or $2 credit. But like I said, for the trade that I'm putting in, if I'm going to go 10 wide, I want at least $2, and I'll defend that area because that's the top of my VIX. So I think I'm just going to let it marinate for the day. You're trying to catch. I mean, it's not. Look, this is a stock market, man. I'm not catching a falling knife. If Netflix drops to this level and we have a high, low, lower, high, lower, low, you don't think there's technical support there? I mean, this has been an uptrend. We've had dynamic support all the way through June of 2023. So it's not a falling knife. I mean, this is buy support on a company that has proven itself to be the leader of streams. And if I'm wrong, what's the most I can lose? $250. So if I'm wrong, I lose 250. If I'm right, I make 250. That's why I'm happy to take the trade. Netflix could literally go to zero and I'll still only lose $250. So I'm willing to take that trade. Because if we are, and here's the deal, if we're sideways on Netflix and it just goes up through earnings, I don't get the trade. I'll cancel it. But I look at this chart, we're almost at all-time highs. I'm not that excited about trading this noise and then trading that. If there's any stumble, I mean, I have no idea. Like Netflix has been, it's been better, but it's like it's obviously noisy. Like here's an earnings play, it went up a ton. Here's earnings, it went down. Here's earnings, it went down. I don't know what it's going to do, but technically speaking, it has still been maintaining an uptrend. So that's what I'm looking to play. And the reason I'm also not going out to like next week's expiration is because if we drop here, let's give it some time to get some support. If it leaves a giant gap, if we have a gap here from earnings, right? This would be, close and this is an open. I mean, if we give the market time, it probably fills the gap, which means we still make some money. So I'm using earnings as a catalyst, but I'm trying to put my trade at a technical level I think would be a great fill. Okay. Right now, I don't know if I have. I don't know if I have any Netflix trades at the moment, other than pending. I just put a pending order in, but I don't think I have. Yeah, I've already taken profits. I did. So during April, Netflix was some wins. Here is Liberation Day this year. I was doing 700, 600s. This is Project Options Edge stuff. I was doing some ratio spreads in here. So I had some income trades on Netflix, but haven't been like super aggressively participating in this. All right, let's take a look at our daily profit play slash double ups because price is cooperating. We're kind of falling into that negative gamma space, which is good. We might see a small profit on our trade this morning. Okay, so a $50 debit. I'm up, $10. We got some percent profit. This is good. Price falls in. We might see this thing, again, going towards our levels. So now what? See how this 67 is picking up a little bit? That 6,700 is picking up a little bit. I think that's looking pretty good. So if we continue to kind of slide lower, I'd love this thing to find 6710, 6,700, and I'm going to take profit. Okay. If it finds it early in the day, I will still take profit because what happens from here? I don't know. If we find this level, okay, one of two things happen. Either it stays here and my butterfly trade offers more profit throughout the day, or it goes through it, or it bounces off of it. And now my butterfly is worthless. So if I have price offering profit in the 50, 75, 100% plus, I'm going to take it. I just want to see if I can get price to do what I said, which is we have an inefficiency here. We've got some gamma levels filling up. We got the 50% ATR. That's why I went a little bit safer on the call at 6,700. Okay, you're seeing that price is cooperating. We're getting some profit already on the butterfly spread. That's good. Okay, right now we're up 50% on that butterfly spread. Cool. So if this is offering, a dollar credit, I might just take the win and be happy. But if we do end up hitting, kind of that perfect center price at 6,700, this hopefully offers up like 100+%, which wouldn't be a bad trade for the morning. Netflix trade showing 77.30 debit. Double check those strikes. That shouldn't be right. You're only doing a 5 wide spread. The trade I put is a 1075. What the fudge? Hang on. 1075 by 1080. I don't know why it showed it as 2 contracts. I was going out to December 1075 buy call, 1080 sell call. Yeah, trading for $4.34. I'm doing 250 debit. There. That's my trade. So I'm not sure how you're getting 77.30 on that. If you're buying this 1075 call, selling the 1080 call, that should be trading for about $4.30. Greg says standard daily profit play 135 out of $1. Good, man. I'm glad it worked. Okay, Susan, you seeing that trade? What's up with your legs? Got a now $1.40 debit. Okay, that's still not what it shows though. This is showing like a 450 debit live, I'm putting it in a 250 debit to fill. So unless you're reading off like the bid price, I don't know if I'm looking at the mid price. That's what I want. I want a mid price of 250. So if you're looking at the bid price or the ask price, I'm looking to get filled on a mid price because it's a spread. Okay. All right. A little bit more sliding to the downside is good. We'll see. Hopefully, just even just a slow unwind for the morning would be great. I've got the take profit already set. 50-cent debit for $1.50 credit. See if I can pull a 200% winner. Hitting, if we hit 67.10, 67.05, probably within the next 30 to 60 minutes, that should be a pretty good trade. We'll keep an eye on that this morning. Okay. Meanwhile, like I said, today at 1 p.m. Eastern time, I'm going to run another trading session for my newsbreakers. If you'd like to join, I've got newsbreakers down to $9.95 to trade with me for the entire year. Not this year, obviously. That's an entire 12 months. So that's a lot of trades we can take together. So I'm going to go today. I've got a whole list. There's like 35 or 40 stocks that we looked at yesterday. I'm going to continue to watch those. And we also want to take a look at the Mag 7s for next week. So Apple, Amazon, Meta, Microsoft, looking to price some of those out today. And we have Netflix pending. We'll see what happens after hours today. Tesla Wednesday after hours. So Tesla's already a live trade. I've got two positions in. I've got one pending on Tesla and one active on Tesla. And then Intel we took for Thursday. Okay. Fidelity's messed up bid. 420 asks $7. I mean, I don't know. It's only a $5 wide trade, so there's no way a $7 is going to be even a trade. So I mean, if you have the legs correct, right? It's December 19th, 1075 call, you're buying that one. 1080 call, you're selling that one. It's only 5 wide. If you have the legs correct, it could just be like a wide bid ask. But you put in the trade for 250, then you're okay. Okay. All right. One thing I am interested in, also take a look at this. See how this market, and again, I don't know if this is going to keep falling, but if we keep going into positive gamma, if we get back to positive gamma, then what becomes a real level today? 67.50, right? I don't think I'm going to do this for double up because I don't want to necessarily like throw 2 trades in, but I want to price it out at least. If I risk $100 for the day and I can get one to pay me $150 to $200, I take a net winner. So what is my 67.50 zone? If I go 67.50 on a call fly, 67.50. So that's 10 wide for $1.50. No thanks. It's cheaper on a 5 wide. I go 30 cents, 40 cents. I mean, I don't mind that trade. It's just it's hard to get this 40 cents to pay. It's hard to get it to pay $1 unless it's later in the day. So I think I'll stick with the negative side for right now. We're negative gamma, kind of eat into this Monday, try to find some of these gamma levels, 50% ATR. Yeah, I'll stick to that side for right now. But I mean, for double ups, I do like the butterfly spread a lot because it is very cheap. Yep, there you go, Venkat. That's perfect. Was Intel trade long or short? It was long. It was a trade. I think I put in the trade. It was like a 26-cent debit for a 50-cent max credit. And we were also getting a head start, or like it was like a 52-cent head start. So price, if it just goes nowhere, we're still going to make 90 something percent. We'd make 24 out of the 26. So we make a 92% return on risk if price stays where it is. And we have about a 50-cent head start. So I'm hoping that with Intel and the government interest and, being in the chip space, it's probably good to be bullish. If it's not, I'm risking a tiny amount and I can always get back in. You know, I have Intel shares, I have covered calls. Unfortunately, because of the rip to the upside at, up to $37, like my calls are $26, $27. So I'm capping my upside already, and I'm just going to keep rolling it for credit. All right, let's do this. Okay, so we'll just hang out for the morning. Bear call spreads are pending, double ups. And what we did this morning is I'm looking to see if these gamma levels to the downside will end up getting filled. Let me do this. I'm going to keep a close eye on this through the morning as I'm reading through, getting ready for class today for newsbreakers at 1 p.m. So newsbreakers, 1 p.m. live trading session if you want to join me. Okay. So that makes officially 5 trades already for newsbreakers this week. IBM, Intel, Netflix, Tesla, GE. We're going to take a look at Mag 7s today. So I'll go Apple and Amazon and Meta and Microsoft, and we'll see what else is sprinkled in. There's a lot of additional earnings coming out next week.